Hi, everybody. Welcome to the November 2025 Economic and Market Update, presented by Commonwealth Financial Network. My name is Chris Fasciano, and I am Commonwealth's Chief Market Strategist. October was another good month for markets, as the S&P 500, Dow Jones, and Nasdaq all posted positive returns. This now marks 6 straight months of stock market gains, which is an impressive result. Strong corporate earnings and falling short-term interest rates help support markets during the month. We're currently in the middle of earnings season, and so far things have gone well. The end of October, the average third-quarter earnings growth rate for the S&P 500 stands at nearly 10.7%. This is well above analysts' 7.9% estimate at the end of September, and highlights the continued fundamental strength of U.S. companies. International markets also saw gains during the month, with developed and emerging markets both up low single digits. Much like their domestic counterparts, international stocks have rallied over the past 6 months as well. Even bonds were up for the month, supported by a 25 basis point rate cut at the conclusion of the Fed's October meeting. This marks 2 straight meetings with interest rate cuts as the central bank remains concerned about the health of the labor market. While markets have been supported by easing monetary policy over the past 2 months, future rate cuts are not guaranteed. The ongoing government shutdown delayed certain key economic reports in October. However, we did receive some important updates. The September Consumer Price Index report showed that inflation remained stubbornly high during the month, as year-over-year consumer inflation rose to 3%. While the rise in headline inflation wasn't enough to keep the Fed from cutting rates in October, this will be a key area to watch in the months ahead, given the Fed's goal of maintaining stable prices. Additionally, we saw continued cooling consumer confidence in October, which was likely due in part to the ongoing shutdown and impact of tariffs. Both major measures of consumer sentiment fell during the month, which could call into question consumer spending growth as we enter the holiday shopping period. Despite the solid month for markets, real risks remain for investors. Most notable is the government shutdown, which will have an impact on economic growth the longer it goes on, and has already delayed key economic updates and increased uncertainty around fiscal policy. Additionally, geopolitical risks remain as well, with tensions in the Middle East and Europe taking center stage. Looking ahead, the overall backdrop remains supportive for markets. Fundamentals are strong, earnings growth is robust, and monetary policy is becoming more supportive. While there are areas of uncertainty and potential risks that could lead to choppy markets based on near-term headlines, the most likely path forward is for further economic growth and market appreciation as we head into the end of the year. That's it for this month's update. I'll be back next month to walk through whatever the markets throw our way. Take care, and thanks as always for watching.